Welcome to Listen to the Market and your textbook opportunity of the day report for Monday, February 6. In this segment, I shall lead you through two campaigns from yesterday. The first one being a buy campaign, which was inspired by the AA concept, the aggressive ambush, and the second one was a sell campaign. Both L.I.V.E students and those of you who've been following my videos for a while should have or would have noticed that Friday's daily bar designated Monday to be a sell day. So let's see what's transpired so far. This will also show you how simple, if not simplistic, it can be to follow the rigid L.I.V.E rule set. The market opened. There we go, opened there, down below Friday's close, and then rallied back up to Friday's close. Gaps are like magnets in a market. Gaps are filled. From the high point, the sellers ruled and pushed the prices down for the first hour and into the second hour. At this stage, it was the turn of the buyers to come back in, and the buyers pushed it up for 1 hour, 2 hours, 3 hours, 4 hours, 5 hours. Clearly the buyers were struggling to push the prices up. Nice vague term. Let's now view the markets through the eyes of the rigid L.I.V.E setups, and the bar highlighted, the one with the black down close, is formally a retest variation sell, as well as being a retest setup of this previous spike high. So there were two selling setups, a retest sell and a retest variation sell, both signaling like a 1-2 punch to go short in this market. Formally, the entry was a break of this bar's low that was then reinforced by the pivot point on the bar of entry. Then we had an inside bar which allowed one to add to the short position, and since that hour, that bar, no high has been broken. Each high has been lower and lower and lower, which brings us up to the current stage of the market, whereby courtesy of the hourly chart and the yearly charts, you can see that we've just broken below Friday's lows. A break of Friday's lows means that the AA, the aggressive ambush rule set, comes into play, which means look for buying setups, notwithstanding the fact that Friday's daily bar designated today as a sell day. Trading is a dynamic. One needs to get out of the box and listen to the market. So we'll be looking for buy setups. So applying the top-down approach using the hourly chart, the 30-minute chart, and the 15-minute chart, we're looking now for buy setups. Formally, the 60-minute bar is a fake-out buy. The 30-minute was a fake-out buy, now it's been reinforced for the reversal to the top side, and the 15-minute bar is a fake-out buy with a second bar reversal. So formally, again, looking to go long on a break of the last bar's high with initial stop loss below the low of the last bar. Let's see what transpired. The market opened on the next 15-minute bar, unchanged, broke the previous lows, thereby setting up a subtle little AA on a 15-minute time frame. The buyers came in, pushed the prices up, we closed above our entry point, and we closed in the top third, top quarter of the last bar. All is well. Next 15-minute bar comes along and we have a higher high, we have a higher low, we have a higher close, and a smaller range. The smaller range is a warning that perhaps the buyers are running out of steam. What we can do is simply raise our stop loss from where it was as initial stop loss to the low of this last bar, thereby dramatically reducing our level of risk. Two 15-minute bars have transpired, which means the half-hourly bar is filled as well, complete as well. And that shows an outside bar up close. Outside bars happen at or before a market turn. This one so far has marked the low. Back to the 15-minute view. Next bar comes along, a higher low, thereby enabling us to further raise our trailing stop loss to the last low, making it totally a break-even or better campaign. No risk to the account. The range, smaller than the previous one, higher high, higher low. Again, just a warning that perhaps a top is in place. Next 15-minute bar comes along and we have an expanded range to the top side, which is a promise of higher highs to come. Below is higher, so the stop loss can be phrased as a trail to lock in almost a 1 hour return on this long campaign that we had from back here. By now, the next half hour bar is finished, so let's reveal that, as well as the 60-minute bar. The 60-minute bar is an outside bar. Repeat, repeat, outside bars occur at or before a market turn. This one seems to have marked a low. Potentially, it may mark a high as well. The 30-minute view is a promise of higher highs, which is in line with this 15-minute view. So, breaking this down, the 15-minute view is calling for higher highs, as is the 30-minute view. Bearing in mind, we're back inside Friday's range, so the AA concept is no longer in play. We're back to the designation of the day, being looking to take sells. Next 15-minute bar comes along, and what do we have? We have that higher high, which fulfills the promise from the previous 15-minute bar, equal lows, so we can't improve our trailing stop loss. This 15-minute bar on the 30-minute bar would also have broken the high, thereby fulfilling this promise of higher highs, and have broken above the 60-minute high. So everything is at new highs, translation, danger for a turnaround. Do we have a formal setup to go short on the 15-minute bar? Yes, we do. We have a fake out sell against the previous spike high. Therefore, our trailing stop loss level becomes the entry for a new potential short campaign, a break of this low around the 77 level. This last 15-minute bar sees the market travel a little bit higher, the aggressive ambush comes into play again, and we end up with a outside bar down close. Outside bars occur at or before a market turn. This one marked the high, possibly marking a low, so prudence, whoever she is, would suggest lowering our initial stop loss from up there to a break-even stop loss at our entry level, thereby making this a risk-free campaign. Let's have a look at the 30-minute view. The 30-minute view shows a similar outside bar down close, i.e. confirming the reversal that we're seeing on the 15-minute. So we've been stopped out of our long position, and now we're currently short. Let's progress for the short. Next 15-minute bar comes along. Lower high, lower low, smaller range. Translation, warning of a potential bottom. Not a reason to panic. Simply you lower your stop and break even to a trail above the last bar's high. Next 15-minute bar comes along. Again, a smaller range, lower high, lower the stop loss. Now we're locking up about a half-hour return. The 30-minute view is complete. On that one, similarly, we have a lower high, lower low, smaller range, simply a warning that a turnaround may be in progress. The 60-minute chart has also finished. And what do we have there? We simply see that the market's gone higher than the previous hour, hasn't induced fresh buying, and the sellers have come home to roost, pushing the prices down. So formally, short from the level up through there, with a trail roughly there now. Next 15-minute bar comes along, and we breathe a sigh of relief, I guess. Expanded range to the downside, lower high, which means we can lower our trail. We've broken below previous lows. We've broken below Friday's lows again. So we're now in AA, aggressive ambush, looking for buy setups. We are currently short. Next 15-minute bar comes along, and what do we have? Lower high, so now we can lock up better than a 1.5 hour return from the short down through there to the trail down through there. We've broken below those lows on the 15-minute, 30-minute, and similarly below those lows on the 60-minute. Should the market be in fact to be bearish, this should fall like a stone. And what does it do? It refuses to. We get stopped out on a break of this second last bar's high. The 30-minute view is now complete, and there we have the expanded range of the promise of lower lows to come on the 30-minute chart. So what you can see from what I've been through today with you, just walked you through, was first of all, the daily chart designation of today being a sell day provided a great shorting opportunity around 11 o'clock my time. That seems to be a critical time on a 24-hour clock. The market came down, 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 down. broke below Friday's lows, thereby triggering the AA, the aggressive ambush, looking for buys. And in fact, we had a little long sortie through there, breaking above previous spike highs. The designation of today being a sell day provided the opportunity to bank some more R's on the way down. Listen to the market. The market has all the clues as to where it wants to go to. That's all for now. Over and out.